Hello and welcome to episode number 42 of Multifamily Investing with Bob Biggins. I'm Bob Biggins, and today we're going to talk about selling your multifamily property. People may want to sell for a variety of reasons. They may want to sell and buy a larger asset. They may want to sell and cash out. They may want to sell just to be done. They're tired. They're tired landlords and they've been doing it for a long time, or they've been doing it for a short time, or their property management company has not given them the returns and the attention that they've wanted. All valid reasons for wanting to sell their multifamily property. These are just a few reasons why people would want to sell their multifamily property. And at Biggins Team, we can definitely help you sell and be a partner with you on that process. Now, what's the first thing that we would do, that you would want us to do? You wouldn't have to enlist us, you wouldn't have to sign any documentation, but the first thing that we would recommend is you get a BOV. That's a broker opinion of value, a BOV. And with the BOV, we would sit down and talk about the improvements you've made. We would talk about your rents, look at your rent roll, look at your expenses, look at your T12, which is your trailing 12 months of rent, revenue, and expenses. We would look at all these different factors and come up with an approximate opinion of value. Now, if that opinion comes back kind of low, you may say, I don't want to sell. I may want to sell in a couple of years or a year, maybe let the market churn for a little while longer, hope things appreciate, or say, wow, I had no idea it was worth so much. Let's sell. Whichever case, we're definitely here for you. And you're saying, well, after that, let's make the decision that we are going to sell. So what would Biggins Team do for you? What would they do for me? Well, we would do things like 3D floor plans, that some call them Matterports. That's the trade name, so we can't really say that, but it's 3D floor plans. We do drone footage. We would take care of all the photography, and we would feature you on a program on one episode of Multifamily Investing with Bob Biggins, of which we're up to probably 8,000 different views, and has helped us sell quite a few multifamily properties. So people get a real good idea of just walking through the property and highlighting all the positive aspects of the property. And of course, we would put together an offering memorandum, of which many realtors, real estate agent, real estate salespeople that are in the MLS, they don't do that. They wouldn't know to do that. They don't know how to do that. So we would definitely do that. In the last few sales, that has helped a lot, because I've had other real estate agents call and ask me a whole bunch of questions. And I said, well, do you have the OM, offering memorandum? And they said, someone didn't even know what it was. So I said, look at that document. It's a 30-page document. It's going to answer every question and more you have about the property, the area, the market, the job perspective, just all the things. That's my job, to put all that together. And we would definitely do that for your multifamily property, whether it's a 2-unit or a 20-unit. We would definitely service you in that way. So what else? We would have a vetted list of buyers, because we have several buyers ready to buy multifamily properties that are could be accredited, meaning you can look up what an accredited buyer is, their net worth and annual income and so forth. And we have people that are newbies. They want to get started and they want to stop renting from us maybe and buy their own initial multifamily property, like a plex, a duplex, a threeplex, or even a quad. So we've got a vetted list of buyers that we could easily turn on to your asset and hopefully get quick offers and quick sales. Because we know their payment history, a lot of them, because they might have rented for us for 3 or 4 years and never been late, never had a problem. So we can talk to the bank and explain to them what good credit risks they are, and hopefully make the deal go very smooth. If there is a multiple offer situation, we would manage the best and final and determine what you want on your sale. Is it highest price? Is it quickest close? Is it easy close? Is it a date when you want to have, maybe you live there and you want to be out? Those are all different things that we'll learn ahead of time and negotiate the deal on your behalf with those factors in mind. So pricing, likely sales figures, and some considerations for what to do with the proceeds if that's something you would want to discuss. Well, pricing, we would use one of two methods, the net operating income and the cap rate method, or we'd use the comparison method. And oftentimes for small or mid-sized multis, both are used in tandem. You use one or the other and choose the one that is the most favorable. There's things we would discuss such as timing, seasonality, and market factors. If you're looking to maybe sell in November and bring it live early December, we may say maybe not be the best time. If we want, we can maybe do it late February, early to mid-March, so that you've got a deal in hand and maybe close by early summer. I know buyers want to close in early summer because if there's any outdoor projects to do, they can get those done when there's still long days and a lot of daylight and a lot of sunshine. So they want to get them done before the next fall and winter come into plan. So buyers also are wanting to get things done sooner than later, generally. Market factors. I watch the Treasury every day, 5-year, 7-year, 10-year banks for multifamily generally go off of one of those three yields, and one of those three indexes. And we kind of know generally if rates are going up or going down based on geopolitical, market factors. I mean, who would have thought 3 months ago that we'd be in a war with Iran today? Geopolitical, and the market would drop, and the 10-year would go through the roof, and oil would go up. It's making for some very slow real estate buying and selling right now because of uncertainty in the geopolitical market. But those are all things that we look at in advance before listing your property and discuss with you. Now, the reinvest, or what to do once you've closed. Maybe you want to just take the cash and run and retire, and that's great. Maybe you've got to determine your tax ramifications. Are they going to be 15% capital gains, 20% capital gains? Have you fully depreciated everything? How long have you owned it for? Do you want to do a 1031 into a different or a little bit larger asset, or a different class of asset? You want to go from multifamily to self-storage, or multifamily to office, or even into industrial, or industrial flex, or warehousing, or mobile home parks. Those are all different ways you can do a 1031 exchange into a like kind of property. Those are all like enough, as long as it's more than what you sold your base property for, or this property in question that we're talking about. And if you buy another one, do a cost segregation. The best methodology is to do a 1031 directly into a cost seg, and then your property that you buy would have the largest first year tax write-off. And some may not understand, like, why, and I didn't for many, many years, way too many years, I'm sorry to say. Why would I want the hugest tax write-off? I can get the tax write-off over time. But especially with the inflation, the way things are now and have been, would you rather have a tax write-off now or tax write-off 5 years from now? Would you rather had a tax write-off and the cash saved in hand 5 years ago, or the tax write-off today? I think between 5 years ago and 5 years from now, you'd rather have that tax write-off 10 years ago than over time in 5 years. So that's why the accelerated depreciation is so very helpful for our business. Just things to think about: property condition, housekeeping. You want optimal returns, obviously. Do you want to list it as is or renovate? There's many different ways that you can skin a cat, so to speak. You can make it fully renovated and say, I'm going to do a flip multifamily on a duplex or threeplex, and those seem to go well because a lot of people want turnkey multifamilies. Or do you want to just sell it as is and just hope for the best returns? Do you want to do renovations to improve your net operating income? What particular things would raise NOI or decrease expenses? Paint is always the best one. It's the cheapest, easiest, and usually gets the best bang for your buck is just painting. You want to clean up your paperwork, meaning maximize your transparency. We think T12, T3, which is that's simply your trailing 12 or your trailing 3. If you've raised rents or reduced expenses, your trailing 12 or trailing 3 or trailing 6 operating numbers, and then you can extrapolate that forward. If it's a T3, you can take those 3 months and extrapolate it out for 12 months and say, because I have leases in place, that's what my rents are going to be going forward, and they can run a bank will run your numbers, your operating numbers on that. But you want to have clean paperwork. You don't want to have what some brokers will call a mom and pop seller that's back of a napkin. And yeah, they're rating their rents on there, and they said, did you miss March and April? No? Well, there's nothing written down for March and April. Oh, shoot. And so you see people like that who don't have the cleanest books, who have just maybe a duplex or a threeplex, or they're a busy professional and they're just not keeping up with things. We got to work to have the cleanest books as possible, because that's going to optimize your return. Because if there's something you can do for a buyer, it's produce clarity. The clearer they can see themselves into your asset, generally the higher price they're going to pay, because they're going to think that everything was run as clean as those books, your asset was taken care of as clean as those books, and they will pay for cleanliness, frankly. A big thing that many smaller operators don't do is they might put windows in or put a roof on or put doors in or carpeting or a new deck. And what they'll do is they'll put that as an expense. And it is an expense, but you want to take that and drop that to the bottom of your income statement and call that capital. That's a capital expenditure. That doesn't count against your expenses. You've put money into the business, you've put money into your asset, and you call that capital. So if you're on the net operating income approach, you want to optimize your rents and decrease your expenses, because the delta between those two is going to be your NOI, your net operating income. And so the higher your net operating income, you want to have your lower cap rate, meaning it's going to be the highest sale price for you. And by doing that, the work you did as far as windows and roofs, that's just capital. That's just, you did that to improve the property, and we'll talk about that in the offering memorandum. But as far as your NOI and your income statement, we're going to want your rents high, revenue high, your washer dryer, your pet fees, all your other things. You want that high, and you want your expenses low for your optimum NOI and lowest cap rate that you can sell for. So those are just a few things that we would do for you. We at Biggins Team, Amy and I, we've done many of these. We enjoy doing this. We love serving our customer. And I appreciate you coming along this journey with me on episode 42 of Multifamily Investing with Bob Biggins. And for today, I'm going to be signing off.